Good morning and welcome to the Killik & Co market update. One of the standout equity movers this week has been Ocado. Shares rallied hard on Thursday to close up the best part of 45% on the day, or just under £8 per share. It signed an exclusive licensing deal for its automation technology, its logistics and distribution services with US grocery company Kroger. Kroger are competing quite heavily with Amazon in the US grocery delivery space, and the deal, amongst other things, will see them take a 5% stake in Accardo. It's worth noting as well that Ocado has been one of the UK's most shorted companies, with 12% of the company shares out on loan to short sellers. And when market participants go short of a company shares, they're effectively selling shares they don't own to buy in the hope of buying them back more cheaply. So they're wagering in effect that the share price is going to fall. Now, to close that trade out, they need to buy the shares back, which can add increased pressure to the upside in an already buoyant share price. At one point, it's worth noting that Ocado shares did trade up to the best part of £10, a share which is an 81% increase on the day. And I wouldn't be surprised if some of that move is attributable to some of the short covering or people needing to close those wages out. But one thing is absolutely for certain is that if you came into the day short on Thursday morning, you absolutely had your fingers burnt. This week, the US Supreme Court ruled in favour of the state of New Jersey in their long-running attempt to legalise betting on sports. The legislation ruling overturned a 1992 federal law which banned all but a handful of states, including the state of Nevada, from promoting betting on sporting events. In the UK, gambling companies have been increasing their exposure to the US, hoping that the market would eventually open up, and it's certainly been a boon to share prices this week. So if we look at the share prices change on this weekly basis, we can see that we've had weekly gains ranging from 18 to 10%. Now, the ruling allows individual states to decide whether or not they wish to introduce sports gambling, and whilst the potential revenue streams are large, it remains unclear as to how quickly the market will actually open up, and also the extent to which licensing fees and gaming duties take their toll. Back in the UK, the government took some of the wind out of these gambling companies' sales when they've reduced the maximum stake allowed on fixed odds betting terminals from £100 to £2. Now, the change is likely most material for a company like William Hill, who have already come out and said that they may need to close shops in order to help offset the potential drop in revenue. Companies like Paddy Power, for example, aren't unaffected, but the impact may be more limited, with some estimates equating a loss of revenue to something like £30 to £45 million per year. But all in all, been a fairly good week for UK gambling stocks. Oil continued its march higher this week and traded above $80 a barrel for the first time since 2014. And this is largely due to continued concerns around the America's withdrawal from the international accord on Iran and the potential for reimposition of sanctions on Iran. Were these sanctions to take place, it may mean that Iran is unable to contribute towards world oil supply, whilst other OPEC countries such as Saudi Arabia have said they're able to step in and fill the shortfall. We'll likely have to wait until the next OPEC meeting in June for anything further or any further clarity on policy. We've also had data which showed that US oil inventories fell again this week, which will further tighten supply. And you've probably noticed over the past few weeks that putting petrol in your car has become more expensive. Petrol prices and oil prices feed into inflation data. So if prices are sustained up and around these levels, then it will likely add to the raising interest rate narrative that we've been seeing of late. Oil is up over 25% over the past 6 months and up 7% in the last month alone. For now, the market's questioning whether we see oil at $100 a barrel, a level which we haven't seen since September 2014. Geopolitics continues to dominate headlines again this week as Donald Trump's efforts in North Korea appear to be unwinding. Trade talks between the US and China are ongoing. We have had news overnight that Donald Trump doesn't maybe feel that they will be successful this time around. In Brexit news, the posturing continues. The Irish border issue and the issue of the customs unit is front and centre, and Theresa May is under increasing pressure to bring something tangible and sensible to the table for the June summit. I guess one of the biggest unfolding stories has been in Europe. In Italy, we have the anti-establishment Five Star Party have formed a coalition with the anti-immigration party, the League. News has taken the euro lower across most currencies as the market awaits further detail on policy and a confirmation of whether the two parties will actually be able to form a government. A populist coalition has been a concern given the potential threat to European stability. although some of the rhetoric has been theoretically toned down as the parties have confirmed that they will look to reform the EU from within. We can see some signs of stress in the spread between the Italian government bond and the German government bond. Now, the spread, which is the yield on the Italian bond minus the yield on the German bond, is telling us that the market's demanding a higher rate of return for lending to the Italian government than it is to the German government. And as you can see from the chart, the spread has been widening this month in reaction to political news flow. So whilst the global political backdrop doesn't seem all that positive at the moment, markets have generally taken most of it in its stride. Earnings season has been pretty positive, and we can see that most markets have been pretty steady, perhaps with the exception of emerging markets where the resurgent US dollar and rising bond yields have generated headwinds. Looking to the week ahead, it's actually quite a busy corporate calendar, but we'll be looking at in particular for Next Group, TJX and Medtronic. That's all for us this week. Have a great weekend and we'll see you again soon.